Why did Nixon feel pressure to close the gold window in 1971 when US debt to GDP was only around 30%? And what can this tell us about our current situation with debt to GDP at 130%? So, great question. But first of all, it was not really a debt story. It was more a question of money printing, but on a much smaller scale than what we have today. So we're going to go on a little history journey, and I could be slightly off by a couple of years and a couple of elements, but I'm more or less right here because I do remember some of this history. First of all, the 1970 reset was called the Nixon shock. Gold was at about $35 an ounce. Currently, it's about $1,670 an ounce. The dollar was very overvalued. Certain things are happening, like the Vietnam War, etc., which costs money. Again, remember, war costs money. It causes things to inflate and appreciate. And remember, the $35, the US dollar was not worth $35. So everybody started doing a run on the gold supplies. Foreign central banks started redeeming the weak US dollar for gold, especially France. And the Fed increased the Fed funds rate to make dollars more attractive. Sound familiar, ladies and gentlemen? So just a step out to try sustain the strength of the dollar. They increased the interest rates. They doubled them in a short window of time. So people would store reserve currencies in dollars. Now, France was very upset that the US could print $100 bills for a few cents. And Charles de Gaulle, again going back in time and history, called this an exorbitant privilege. And he hated the fact these guys could just print money out of thin air. Sound familiar, everybody? Every time I say sound familiar, hit the like or do something cool. So France broke the system. Charles de Gaulle sent the Navy to pick up their gold in I think it was 1966. And the US only held about $14 billion in gold. And the US convinced Germany not to do it. The US slashed rates in the late 60s to fund the Vietnam War, made the dollar weak, and there was a run on the dollar. And by the 1970s, the US only had 16% of the world's gold reserves. They had 66% a few years earlier, but the French tapped it all and grabbed it and took it back. So the US could no longer back the dollars with their pretend infinite supply of gold because they didn't have it because they're printing dollars like crazy. Sound familiar, everybody? Yes, well, we're here. So the final straw, when did things break, is when Switzerland, CH, asked for their gold back. And France wanted to pull the rest. And then the US gold supply would vanish. So there's a full-on, not a bank run, but a gold run. And then August 15th, 1971, Nixon said, everybody, we are going to suspend temporarily the convertibility of your dollars into gold. And we're going to put a wage freeze in place for the whole country and a price freeze. Yes, they've done that too. And the current politicians in place have spoken about price freezes this year. Again, sound familiar? Now, Nixon blamed, he was the president at the time, he blamed speculators, not the Federal Reserve. All of a sudden, it was the speculators' fault. Speculators like France and Switzerland and a few others. George Soros wasn't around back then, but if he was, I know what he would have been doing. And they also said, buy American products to stabilize the dollar. And by the way, that temporary freeze on conversion of dollars for gold has lasted more than 50 years. So we'll see. Now let's look at what happened, because this is also important for Bitcoin. Sorry to be long-winded here, but this is important history because there's so many analogs of what's happening today. We had the gold rush in 3 years. This is from when it was like $35 an ounce. It shot up to 200, which is a nice 6x return on your money in a very short window of time. And this was mind-blowing. You know, gold price had been stable for an extremely long time, and all of a sudden, 6x in 3 years. Sound familiar, anybody? Think of Bitcoin. And in the next 10 years, it went up 19x. That's from my trading view. It's a bit of an ugly chart, but the point is, it went up 1,900% over the next 10 years, and that was crazy, crazy return. Again, have you seen any charts like that? The answer is yes. So that's how it all happened. That's what happened. It wasn't because of debt to GDP ratios. It was because of all the other factors I mentioned. And all of that same stuff is happening right now. We are living through this history. That's why it's like a macroeconomist's Christmas time to watch all of this stuff go down at the same time. So it's nuts.